Hi investors. Today we're going to discuss about the commodity supercycle. Last August, Warren Buffett's Berkshire Hathaway increased its stake in Japanese trading companies, namely Mitsubishi, Mitsui, Itochu, Sumitomo, and Marubeni Corp. For some companies, Warren Buffett is the largest shareholder, and for Mitsubishi, he owns more than 10%. Usually, owning more than 10% is a cumbersome thing, right? Warren sometimes sells shares in a company that he invests not because he doesn't like the company, but because he doesn't want to trigger some regulatory threshold. In Japan, if you own more than 10%, you are considered a strategic investor to the company and have greater disclosure obligations. In particular, any additional share purchases will require approval from the Ministry of Finance and other related government bodies. Japan is a small country without natural resources, and because Japan is a huge manufacturer of everything, they need to secure natural resources to run their factories and manufacture cars, Walkmans, and many other products. This job is done by Sogo Sosha, the trading arm of many manufacturing conglomerates. They purchase and trade commodities including energy, oil and gas and coal, metals, precious and base metals like copper, minerals, iron ore, and soft commodities. So let's check out the share price trend of Japanese trading companies ever since Warren Buffett bought them. Warren started collecting Japanese trading companies before the pandemic, and over the years, share price of these Japanese trading companies have risen quite significantly. He is indeed a visionary stock picker. Within Berkshire Hathaway's stock portfolio, Mitsubishi, Itochu, Mitsui, Marubeni, and Sumitomo ranks on the 8, 11, 12, 14, 16 within his top portfolio. If you add the total value of all the Japanese trading companies, it would be 10.2% of his total portfolio, making them the third largest holding after Apple and American Express. They would be higher and larger than Bank of America and Coca-Cola. And surprisingly, Warren stated that he is going to buy more of these Japanese trading companies. Why did Warren buy these Japanese trading companies? Well, we think Warren is betting on high inflation and high commodity prices. As discussed earlier, Japanese trading companies are proxy to commodities. All of these companies have commodities as their main business. Look, all of them are engaged in commodity space, including minerals, energy, metals, chemicals, and agriculture, so on and so forth. Not to our surprise, commodities are the best performing funds. This is the list of top performing iShares ETFs managed by BlackRock. Removing all the country ETFs, 10 out of 15 are commodities related. Silver, metals, gold, lithium, copper, clean energy, so on. Take a look at this interesting chart. Larry Summers, former Treasury chief, mentioned the shape of the past decade's inflation curve almost perfectly shadows its path from 1966 to 1976 before accelerated in the last 1970s. So if history is any indication, current inflation curve is mirroring the exact same path from 1966. After 106 months since January of 1966, inflation peaked, just like COVID inflation peaked in June of 2021. He argues that we are at the early stage of the second wave of inflationary cycle that will peak out in late of 2027. Combine that with Fed's rate cut initiatives, we think this could be an early stage of commodities and asset classes rally. Stock, bonds, crypto, you name it. Warren is not the only person that is betting big on commodities. US government is also betting on commodities. Recently, US government invested 15% stake in MP Materials, a rare earth minerals company. 10% in Lithiums America, 10% in Trilogy Metals, a company mining copper, cobalt, lead, zinc, gold, and silver, and owns a golden share in US Steel. Furthermore, US government exempted the trade tariffs on many metals and minerals. Take a look at MP Materials' share price chart. After the announcement of Pentagon becoming the largest shareholder of the company in July 2025, shares jumped instantly, and Apple signed a $500 million commitment with MP Materials on the same month that Pentagon became the largest shareholder. And the US government is taking this seriously. US is investing $1 billion in critical minerals and materials, and US Defense, now Department of War, is buying cobalt up to $500 million. Just for a quick reminder, China is near total control of the critical minerals. For cobalt, which are used in batteries and jet engines, US is dependent on imports from Vale, Sumitomo, and Glencore. One analyst argued that commodities are cheap relative to gold. He stated the signals flagged the start of new and substantial cyclical bull markets in commodities. Because gold here is expensive and commodities are cheap, there is high chance of a rotational shift into commodities. He added that commodities are cheap, the macro is starting to come into place, and technicals are turning bullish. We need to also highlight that money is melting. US M2 money supply is surging even higher than that during the COVID cycle, and Federal Reserve has just entered a rate cut cycle. Assuming Fed cuts its key interest rates further, the melting rate of money will accelerate, and you would want to hold on to assets rather than hold on to cash. As a quick reminder, possibility of Fed's rate cut in October and December are 95% and 84% respectively. So we should expect the Fed fund rate to be lower by 0.5 percentage points, which is 3.5%. But not all commodities are created equal. The value of the dollar is likely to weaken gradually, which should boost the commodity prices higher. However, not all commodities are going to enjoy this bullish cycle. As seen in recent trends, gold, silver, palm oil, and copper have remained positive trends, while oil, coal, and nickel haven't been performing so well. That is why it's imperative that investors speak closely with analysts and sales representatives for recommendations. Within the commodity space, we prefer gold, copper, and CPO. Within the gold space, we recommend BRMS and Anikatamba. For copper exposures, we recommend Aman. For palm oil companies, we select TAPG and NSSS. We also have one special mention, which is tins. Price of tin have also been on a steady rise. So the moral of the story goes like this. Warren Buffett is buying Japanese trading companies, and he is going to continue to buy. Second, we suspect Warren Buffett and the US government as well. They're betting on high inflation, high commodity prices, and weak dollar. Thirdly, if history is any indication, we are at the early stage of the second inflationary cycle. Money is melting, so you don't want to be holding on to that cash. Last but not least, all commodities are not created equal. Be selective and speak to Samuel representative. If you've enjoyed this content, please like and subscribe. Thank you.